Welcome to The Lumber Word, where industry veterans Matt Beamer, Gregg Riley, and Ashley Buckholt dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode, number 84 of The Lumber Word. We're recording this on the 17th of July, 2024. Matt, Gregg, Ashley, we're all back in the seat here, working on a few things, so glad you could all join us. I wanted to kind of start, Matt, we talked about your trip to the inland. Maybe we can find out what, I'm going to overuse this word, what the zeitgeist was there.
Oh God!
Yeah, you like that word now. You're really,
I do.
That's your new word. You know, you should have a different word every day, not use the same word every day.
I didn't use it today yet.
It's like you're sassing your old man back. This was more subdued than last year. Last year we were in a rally mode and everybody was very happy. You know, the mills were happy, retailers were happy, distributors were happy, wholesalers were happy. And I came back from last year saying, I just want to sell because everybody's too happy, right? It's like, you just don't have those summertime rallies normally. This is more of a normal July. You show up, everybody's got their sleeves rolled up. They've had an okay year. Everybody's happy to be there because it's a really neat event. And the weather was hot. I mean, it was one of the hotter ones I've been to. There was no smoke. There was no drama. It was a very normal year. I would say the number of attendees was down a little bit from last year. And then the giddiness was definitely gone. It was, people are just resigned to, hey, this is the market that we're in and we're just going to have to just battle through. So that to me was much more of a normal type of situation. Did get a few people coming up to me and asking me about the podcast though there, Ashley. So that's kind of cool. It's I got the feeling there's a lot more people paying attention to this than we realize sometimes. I don't really ever see the numbers or whatnot, but I'm continually surprised by just random people coming up and going, hey, I hear you on the podcast. I don't miss it. I listen to it every week. I'm like, cool. That's really nice. I like it.
Yeah, that's good. That's good. So more importantly, how'd you do on the island green?
I chunked it in the water, 7-iron, 130 yards. I needed to go 150.
Right on. Well, that's good. So leaving there, you felt everybody thought 2024 wasn't going to get any better, was already in the books type of thing?
I don't know that I would read that far out into it. I do think that there's some optimism into the fourth quarter and first quarter of next year. I think in the short term, in this quarter here, the third quarter that we're in is the one that people are just sort of resigned to take what they can get, fight the battles that they have to fight, and see what happens.
Yeah. Well, let's jump into housing starts because there's some interesting things there today. That's the big report that came out today, permits and starts. And I guess looking at them, Gregg, you usually dig into them pretty good. What did you read? You basically highlighted the completions, which were huge.
The thing that really sticks out, maybe you remember, during like late 2020 and most all of 21, early 22, we kept highlighting going, there's such a huge disparity between starts, permits, and completions. Starts and permits were running up there, $1.5 million, $1.6 million, $1.7 million, and permits, and completions couldn't get off like $1.25 million, $1.3 million, blah, blah, blah. So now we fast forward here, completions have been trending up, and now you have a completion number of 1.7, and then you compare that with a start number of 1.35 and a permit number of 1.44. So we've gone a 180 there. So, here's this. Housing starts and permits were up. They were better than expected in the month of June. Nothing crazy earth-shattering, but multifamily permits and starts were the big change. And if you remember, we've been talking about, multifamily down 40, 50%. Well, you've got multifamily permits up 19.2%. And now they're only down 24.8% for the year. And on the start number, Now they're only down 36% for the year. And we were talking about this. I mean, multifamily completions are up 25.3% from last year for the first, year to date, right? So, what's been the real focus so far this year has been, and we came into late last year with a record number of multifamily under construction. So it really makes a lot of sense. You've had the focus on the multifamily sector has been completing all the projects they have and not starting new ones. So what's it going to be going forward? And I guess I'd say that, hey, continue to look for more recovery in the multifamily sector the rest of this year and certainly into next year.
That would be the big surprise, right? Going into the end of the year, multifamily being stronger.
Yeah, I mean, there's going to be what are we going to be down for the year if multifamily starts year to date? What did I say? I said they're down 36.3%. Maybe multifamily is only going to be down 25% this year, which
I thought
means,
multifamily was
going to be a lot
down
stronger in the second half of the year. But one of the things I want to look at, multifamily, having those completions up is really good because we need that supply. I was having this discussion with somebody yesterday, and it's like kind of a one-on-one thing. So if you want more of something, what do? So you incentivize it. You may lower tax rates. You reduce regulations, and kind of in a worst case scenario, you subsidize it. That just makes a misallocation of resources. If you want less of something, you tax it at a higher rate, you increase the regulations, or you put in price controls. Under the category of out of touch and insanity is I saw a thing on my sticker yesterday that the administration was going to put a cap of 5% on rent increases. And I went, boy, what a way. Number one, I don't think they can do it. But number two, like, how about a touch of you? Rents are down year to date. Rents are down. And so, like, you feel like you need to put a cap. I mean, the best arbiter of supply and demand is letting the market, we're going to build more, so if you want to drive rents down further, they could do it just by easing regulations, right? Changing tax policy. Those would be, like pro-growth ways to do that. Anyhow, I digress.
That makes way too much sense, Greg, and that's probably why that won't happen. But actually, that's what it's showing us on this trend on new residential construction right now. That looks like it, right?
What's that?
That we're actually starting to pick up a little bit on multifamily again.
Well, yeah, the numbers.
That's what
the numbers say. We went from being down. We went being down month over month. Multifamily starts were up 22% from the month prior, and monthly permits were up 19.2% from the month. I mean, it's a highly volatile sector. I mean, these numbers are highly volatile. The revisions on, these numbers are fairly substantial. I mean, they go back every month. I think they go back 3 to 6 months and make revisions to the numbers. So,
right. Let's go into the market a little bit. I know we've been talking about it. I was telling Greg, Matt, I came out on Twitter Saturday and said the bottom was in. Kind of felt like it last week. Kind of really felt like it more in the last 4 months. And I'll kind of went through a whole string, and Matt talking to you and Greg over the last few months. It's like, I've never seen so many people to one side of the boat that I've seen as of last week, right? I think we replaced a lot of the weak longs in the market that we're losing. And what I heard is on the board with stronger longs, new people backfilling at a cheaper price. So some of the longs took their licks and new ones backfilled it because the open interest didn't change much. Pure guess on my standpoint there.
They're only stronger because they're not out of the money yet.
Inventory was getting run down. One thing that I noticed is, and this is just a theory I came up with, mills have gotten a lot smarter running their mills. And sometimes we have a tendency to think back with a 20-year type of mentality of, hey, when are all these mills going to come out with announcements, right? Well, I think quietly over time, a lot of them have throttled some capacity. And, talking to some people in the South, they're like, hey, we just found out some of our mills are are cutting some shifts, and they're not coming out and making big announcements. They're just doing what they need to do. And I think there was a lot of slack in the pipeline, extra inventory. My belief, and I'm not even looking at the demand slide here, but I think that there's been a lot of work over the last 4 months, maybe not 4 months, but at least the last 2 months to eliminate a lot of that slack in the pipeline. We've been doing it. There was a bunch of orders we took that weren't that pleasant, but you got to do it and move on, right? And I think
Yep.
we're getting to that point with liquidation in the market at the distribution level, large yards trying to run their inventory down, getting calls from their higher up saying, hey, you got 30 days inventory on this item. If you get 32, we're going to have a problem, right? Just stuff like that. And I think we kind of are up against, and I could be wrong on this, but I think we're up against that point. And from the orders and the inquiry I'm seeing coming in the last 3 business days, it's even showing that more guys checking on orders, looking for heavily mixed trucks, coming back and paying your price. Southern Pine firmed up a little bit in the last few days. So that's what I'm seeing. Could it be a $50 rally and now we'll just talk cash? Yeah, possibly. Could it be more than that? I don't know. I don't know. You gotta, we've stopped going down, at least from what I see. I mean, Matt, Greg, thoughts on that?
My thoughts are that we still need to flush some inventory. Now, there's inventory on the ground. Some of it's being managed, like my inventory and your guys' inventory. You guys are actively managing your inventory. You have active trading and hedging strategies, and so do I. And this is what we've talked about for 2 years on this deal. Is this is what we do. And then there's some piles of inventory that aren't managed, that are just piles of inventory that need to be broken and sold. There's a chunk of that. I heard some of this horror stories while I was in Idaho about some inventories that are just old and nasty, and not mine. They're just other people's. I'm not going to name names. That they've just buried their head in the sand, and it's cost some people some jobs, and it's going to cost other people some jobs in the future, right? If they don't address it. That being said, our mill inventory has ended the quarter at a low to medium. So we're not high inventory over here. We're not stacking. And I think we quietly took some time off during 4th of July at all of our mills. I think a lot of mills in North America did that also, or at least in the United States, took the whole week of the 4th of July off, or a good chunk of that week, and just didn't run anything. And so that, combined with the seasonal holiday curtailments that normally comes out of Canada, especially out of the eastern side. And then the realization that selling spruce at 325 mil isn't really very profitable. Selling studs, like we're selling hem-fir studs at 320, 315, that kind of stuff. 8s and 9s are cheap right now. We're at multi-year lows on a wide variety of different products right here. This is not profitable for anybody in the lumber business. And somebody sent me a chart. It might have been you, actually. Somebody sent me a chart of all the different building materials that are used in building a house. And the only one of them that's down, and we were down like 8 or 9%, is lumber. Everything else is up. So roofing is up, piping is up, cost of land is up. I mean, the cost to finance the land is up. I mean, forklifts cost more, gas costs more, just whatever it takes to build a house is more expensive, other than lumber. Lumber's the only thing that's down, and it's down significantly. So, I mean, I'm starting to look at this as, how would I really invest right now? And I think I'll talk more about it during the Marry Date Dump segment. But when I start thinking about investing, I haven't been thinking that way at all for 2 months. I've just been thinking about managing, but now I'm at a point where, and I think smart people, I'm not saying I'm smart, but there's other people that I respect, that I listen to, that say these types of things. And they're starting to come around to what you're saying, that, hey, maybe the worst of it's behind us here. And they think that the Fed is potentially going to drop rates for real this time. And the winds of change are sort of in the air right now. And the change is going to be a positive one. So it might take a little longer than we expect, but I'm quietly optimistic.
What's that German band back in the 80s that sang Winds of Change, Matt, that metal band?
Geez, I don't know, man. Europa?
Maybe.
You take me back to high school, buddy. I can't remember.
So no, I got to the point where everybody was so negative. And as Greg always says, you're always going to be early picking stuff like this, but and this is going to take a lot to turn it around. But it feels like we've made the turn. In my Greg thought,
Asked when you said you were putting that out, I said, hey, yeah, I mean, you know what? I get that. I felt like I had lost a lot of credibility in the prior 2 months of saying that prices would be higher in July, and they kept going down. And I have the position to prove that. I get the constant calls and emails from up above about inventory. I'm in the unfortunate position of having to be, much more aggressive selling right now than buying. A couple things that I like to look at. One is when you look at the market, if you had no position at all, you came in, you had nothing, you had no position, you were starting brand new, fresh. What would you do today? Right? You answer that question, that tells you a lot about what your position in the market should be. In a market now that's been down for well over 4 months, and as Matt alluded to, we're at multi-year lows. We're lowest prices since we were during COVID, whatnot, blah, 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 blah. If you went out to the marketplace and buyers, whether you're multifamily, retail, distribution, if I guaranteed you today's prices are the lowest price you would pay for the rest of the year, how much lumber would you have to buy? Answer that question, right? Now, I can answer it for you. It doesn't matter how much you buy. It's not enough.
It's not
when
enough.
The market goes up.
Yeah. Yeah, that's a good.
That's true. Hey, Greg, I want to say something about you're being hard on yourself here, man. We all make calls that aren't right, and that's why we hedge, right? This is part of being a veteran trader and realizing that we're not always infallible, because we aren't. But I think where we, as a group, the three of us, made a miscalculation, and this one surprised me actually, because I started asking questions when I saw the market continuing to go down all the way through June. 2 points to where we are now, where yellow pine's sub 300 and spruce is low 300s and Hemfer studs are low 300s. Like, these are prices we haven't seen in 5 years. So I'm like you, I'm surprised. I was taking your side of the things as well. I felt like we'd have higher prices. Where we made a mistake is not realizing how much the mills investing in their own optimization, and there's been a decrease in log prices, and there's been a small decrease in duty costs for Canadians specifically. So that the break even we're thinking was 450, 460, 470, 480 is probably more like 400. And so they're also getting a better yield out of that log. So 10 years ago, all the log come out of BC and parts of Alberta was that blue stain log. It was worth nothing, and it was cheap. You could run your mill, and you could feel some pain for a while, but it wasn't going to crush you. The log that we're getting now at Babine is a fresh, bright log. There's no blue stain in it. We get very little low grade. We used to get 25% low grade. Now we get 8. And I don't think we're alone. I think the yields are higher. So you get a log that produces more high grade lumber of higher value and less low grade lumber of lower value, and your sales averages naturally just rise. Meanwhile, your efficiency's gone up, and so your production costs have gone down. That's something I wasn't even thinking about 60 days ago. Well, to my detriment and yours, we've learned that these mills can take a little bit longer pain periods than we thought. So I guess my read on it is I just learned something new, and I adapt.
Yeah, and I mean, you learn that by asking the questions and looking at it and paying the tuition for it, right?
Look, dude, you guys going to have an okay year one way or another, right? It's not like this is going to be 2008.
Yeah, I mean,
let's not get carried away here.
We've made gobs of money on our short hedge, which, hey, that's really great. But the cash orders going through do not. There's no fun there. That's for
right.
Sure.
So you weather it for a month or two, and then you've got 10 months of good paper and 2 months of bad paper. You'll be fine. This is a long-term game, right? This is not a, oh my God, That's not
You know
how
what they say? It's never as good as you think, and it's never as bad as you think, right?
as witnessed by the report today, right? That makes you feel a little bit more optimistic. Did you think that you would get a significantly better housing report than that? I didn't. Everybody thought it was gonna be down. All the
Yeah.
experts forecasted it down.
Yeah. What do they say? What's that poem say? Take the bad news and the good news and treat the two imposters the same.
Well,
So
Greg, the point that I was trying to make was don't be so hard on yourself, dude. You're still.
Well, I appreciate that, Matt.
I learned stuff from you all the time.
Thanks. I'll take a little love. Thank you.
You're welcome.
you deserve a lot of love, Greg, because a lot of the thought process in that Twitter feed I do, that's why I kept walking into your office asking you questions. I probably appropriated, if I can use a liberal term, I probably appropriated some of your thought process there. So I appreciate that.
We went through this before. What's mine is yours.
Well, let's do the.
Well, just a quick,
yours, right?
quick question. I want to ask, I don't want to just use confirmation bias from what I'm seeing and trying to fit it into, but what I'm seeing today is a lot of inquiry, short covering. I'm having some wholesalers call me asking to cover some different things. I'm seeing highly mixed trucks of stuff with 7 things on them that need to ship next week, which I'm not good at on a lot of it. And I'm seeing items.
We can't do that.
Yeah. But there's items that are starting all of a sudden take off, and I think Matt, in our segment, that's a good thing to look at there.
We get Mary Day dump this week.
Yeah, I wasn't as prepared for it, but I mean that's the best way to do it.
We can wing it. Go ahead, Matt. You wanted to do it.
I want to marry cash 2x4 spruce and sell the board against it. I just think the basis is tremendous, and I would just at this point I'd be tempted to just buy it naked for 2x4 tune better, good random spruce. I feel like the mills will probably shift production more back to 2x6, 2x8, 2x10, 2x12 because the 2x4 thing has just been killing them here for the last 60 days.
So
and it's not just
you could have taken delivery of July and sold September with a $50 1,000 basis. I mean, can you buy Western Cash 2x4s better than 430 Chicago equivalent today?
It depends on, I don't know exactly. I'm not, I just probably 430 is about right. Maybe you get lucky and find some low hanging fruit at 420 or 415 or something like that. But, I like the basis trade or even just naked buying 2x4 tune better spruce. I'm selling actually a fair bit of Hem-Fir 2x4 here into the Western United States for $35 more than what we'll sell spruce for, right? And I'm not just selling one. I'm selling multiple cars over multiple days, over multiple weeks here. This isn't like me guessing. I'm not guessing. I'm telling. So I really like spruce 2x4. And if you can buy spruce 2x6 at the printed price, I think that would probably be a good trade also. I like a lot of the cheap 2x6 number 3 that you can buy in we're offering some 2x6 number 3 at $340 Dallas for some 12 and longer. To me, that's kind of an investment level type price right there. Now I know that yellow pine's cheaper, but I don't trade yellow pine. So, in the things that I do, I like that kind of stuff. I wouldn't marry it, but I date it. As far as dump goes, I just want to continue to dump the lengths of my inventory that I have too much of. And I've solved most of my problems. My inventory is down by 35% in the last 3.5 weeks, 3 weeks maybe. And so I'm happy with the progress I've made, but I still have 2 big piles of 2 SKUs that I just want to move, right? Actually 3. And I'm resigned to just getting my teeth kicked in on my costs for the month of July, and maybe I'll fight back in August and September, but I still have hedges on, and I'm just like you guys. I've been managing my way through this. That's what I want to dump. I want to dump my SKUs that I have too many of, and just get my inventory sort of back in line with a good even keel mixture of the right products for where I'm at. There you go.
Greg, I'll let you go since I don't want to have the same thing you do, which I may.
Well, you call the bottom, and if I had no position at all today, or I knew that, like if I could guarantee this was a lower price, what do I like? I love 8-foot studs. I like 9-foot studs. I like 2x4s. I especially like 2x4 16s. I like 2x6 because you like, you got to have that too. What we're seeing, we had a lot of basis trades on MSR, and we're starting to see some relative strength in MSR, which is very seasonal. I'm going to look for the MSR spreads to really blow out between now and in September. They typically peak in October. I really, really like 2x4 18s and 20s because I bought a ton of them from this guy, and so I like them a lot.
Thanks, Matt. Those are good looking pictures too.
I hate. What do I want to dump? I have no grade stamp 2x4s down in Florida that they got to go. I gotta find a place. I gotta find a guy that can take them because there's just no reason I can't hang on to them. That low grade market. Historically I've been able to ship that back over to Texas, but I can't get that done right now. So I'm in a box on that. So there you go, Ash. Did I leave you anything?
I'm going through my list, crossing off everything you're talking about, and I have nothing to talk about now. No, but
go like this.
But no, I'll highlight something here. Okay, so where's September futures at right now?
480.
Okay, 2x4 16s. Here's why I want to stay married to them. Where are 2x4 16s at right now? Into Chicago. And I heard today from somebody out in BC, the 16s have actually firmed up in the Western mills. I don't know if that's true, Matt. Maybe you could tell me, but I heard the
Western Prince 435. Great Lakes is 425. The euro in the Southeast was trading at those numbers. I think euro in the Southeast maybe is $5 or $10 above those numbers. Right. I know Eastern prices maybe up $5 or $10 from there.
So September at 479 futures. Where should 2x4 16s be fairly priced at?
Plus 50.
Like based on long term, they should be $500. $500 Southeast Port, $500 Chicago, $500 Great Lakes.
So I like those. The other thing I want to marry is if I'm buying something and there's not much of a price spread between that and premium or select, I'm buying premium or select because I'm not seeing as much euro come over, and I think that's going to kick in the premium and select at the Canadian mills and other mills. And agree, 2x4 18s and 20s, kind of did a long-term chart on that and took a look at it. And the hard thing is they've been competing against Southern Pine south of Chicago, but I think that spread will eventually work out. And we've got some good, some people starting to look at them in the Wisconsin, Minnesota, Illinois, Michigan market. So we got to find the right trust people for that. Date. I want to date like 2x6, 92 and 5/8, number 2. Some odd trims of studs because I'm getting all kinds of inquiries on studs, and studs have been really liquid through all this. I think we made the comment how there was so much 2x4 out there. I think that's remedying itself a little bit, but studs are still really good, especially if you had different trims for a lot of things. And dump, Matt, I agree with what you said. Any of the shrapnel sitting out there and just keeping stuff turning no matter what, because like Greg and I talk about this all the time, right now isn't the time to be keeping wood on the ground for a long period of time. Greg, what do you usually say? October is the time if you're going to buy something?
I mean, like my general rule, northern reloads. I mean, you can put wood in October, and it's fine. It's fine through the winter, and you can sit on it for 5 or 6 months on a basis trade. Wood that comes in the first quarter needs to be out by the second quarter. Wood that comes in the second quarter, my thing is like anything that came in before the 4th of July needs to be gone by Labor Day. So
that's a great observation, and this is something that we talk about as traders over here in the West. Lean and mean by Halloween is a joke of ours, but I always look at Labor Day as really kind of my critical, just some inside baseball for me. But, Labor Day is kind of my cutoff date. If I haven't dealt with any problems that I perceive or in my inventory, like say on June 1st, I look at my inventory report and I've got XYZ things that are just sitting there doing nothing. I always give myself until Labor Day to solve those problems no matter what. Even if it costs me too much money, I don't really care at that point. I'm just solving a problem. I'm moving off some stuff. And I'm curious, you bring up Labor Day. So what are your thoughts about physical inventory positions in the United States come Labor Day this year? What do you think they're going to be compared to Memorial Day?
Lower.
Yeah, significantly lower.
We have a stretch goal. I mean, I'm not gonna say target, right? Anyone in Montreal listens to this. This is a stretch goal to reduce our inventory by 50% by the end of August. It's very much a stretch goal right now.
I will help you. Call me.
I love it. But look, part of it is, part of this whole thing too.
You know the hardest thing to do, Matt, when you reduce your inventory? Stop buying. Just stop buying.
Yeah, sometimes it is. Hey, I'm getting another phone call from Washington, D.C. You think somebody wants some money?
Yeah, there you go. So
I love your backdrop there, Matt. I
love the American flag up there. It's like America.
America, baby, America.
Yeah. And hey, look at. I mean, I think my head is in a positive thing. I think a lot of people are still in it, and I think everybody's getting there again, right? And it wouldn't take much after a 4-month freaking sell-off without any really bounce at all. It was unprecedented kind of way. I haven't seen that kind of sell-off in a maybe in 2008 or 9, but in a completely different backdrop, right?
No, even
it's what happens.
You have markets, they go in the cycle, and it's like they sell off, and then there's a rally, and they sell off. That's a typical bear market. I mean, this one's been, the only rallies that have been at all have been the board. And if you're a hedger and you've taken advantage of it, then you've been better off if you didn't. Like the guy that called me up and goes, God, you've really done great, Greg. I went, yeah, well, if I was 100% hedged, I'd be doing backflips. Instead I'm still doing belly flops.
Yeah. So the reason why the board, what you're just talking about, people, replacing their bad longs with good longs.
Well, Greg we're talking about this the other day, and I think that may have been what happened.
I mean, the reason why.
We can talk about open interest for months now, and my feeling is every time the market goes down, we replace one set of longs with another set of longs. The only thing that's been constant is the funds have stayed short the entire time, and I don't know what they're probably not going to come out. Here's where we are. We got this $40 to $50 premium. As I told Ash, I said, we can hold that premium for probably into early, maybe even to mid August without cash responding. But that's about as long as it can be. And, it's going to be a real test. Is this a market that, cash bottoms out and bounces, I don't know, $25, $30, $40, $50, whatever. And then we're right back down at the low numbers on September expiration, or is this a market that, rallies, $50 to $80 and has a slight setback and we have a higher high in the fall? That's really going to be the question. But back to Ashley. Ashley has to be right first.
Right. Exactly. It's at first it has to do something.
The longs have been wearing that position in the board for a while now, and they finally capitulated. I think when you saw the expiration in July at 418, somebody was long several contracts for too long. They just held on too long. They at some point in time the shorts are going to hold on too long, and so when the shorts start feeling a little uncomfortable, you'll see some reaction, and it'll come from an outside event that you or I can't really think of. But we know the mills are reducing inventory and reducing production. We know that traders are reducing inventory and distribution is reducing inventory. We know that retailers are reducing inventory. And so everybody's deflating at a time where consumption should be pretty good in the third quarter and into the early fourth quarter, right? So it's not like the market is terrible. The housing report just came out really positive. I mean, at some point in time, all these things sort of matriculate and turn into more of a normal market. We've been in a bit of a funk here for the last 2 months that's I would call abnormal, but I think we're through the worst of it at this point. I'm leaning with you, Ash.
From your lips to God's ears, Matt.
We shall see. I mean, hey, dude, while we're talking, I'm getting orders here, and I'll leave you with this: people are buying, like coming to me, right? I'm receiving orders and inquiries from my customers, and this has been going on for a couple weeks now. This isn't just today. So that's changed. That's, from early June to mid July, that's a change. But another change is that we're having massive amount of thunderstorms and lightning strikes here in Oregon right now, and it's been up around 100 degrees for since 4th of July. And so we've shut down all of our recreational lands. You can't recreate on Hampton lands right now. We're going to have red flag warnings over here. We're having all these things are going on for fire danger. I'm not a big fire danger proponent. I don't trade based on fire danger, but other people like to know what's going on in the West. And I'll tell you, that's what's going on in the West. The whole West Coast is hot and dry, and there's a lot of fuel in the forests, and there's going to be forest fires, right? So
yeah.
There's another thing to think
a lot
about.
more. I'll look forward to next Wednesday, and and see if we can, if we're going to be able to report that the prices have started to rally. That would be pleasant. That would be a pleasant surprise, a pleasant change from what we have had.
That sounds great. And Matt, you had a good point about getting some more guests on. We've got a few lined up. I
told you Westbury's is coming back from his European vacation, and he says he's ready to come back on. So maybe if it's not next week, it'll certainly be maybe the week after. He also wants to take me golfing to Sand Hills. I said yes, that I was available that day and the alternate. He said, "Well, I didn't give you a day." I go, "Yeah, but I'm available."
What is Sand Hills? Where's Sand Hills?
It's in Nebraska. It's just an awesome, unbelievable golf course in Nebraska.
I think the whole Lumber Word team should probably go to Sand Hills.
Well, aren't we going to BC in October?
If he fires the PJ up, then we're all set.
So we are going to BC in October. Do we have Greg? You got it booked. I've got to get mine booked.
I got the whole thing booked, and I just don't know when I'm leaving.
What's the date on that?
I'm going to say it is the last week in October. I think I am flying up on Monday, October 28th.
That's going to be a great event. That's Russ Taylor holds that. It's the Global Wood Summit, right?
We'll need to have Russ on in the next few weeks so he can give another plug to the folks.
Absolutely. All right, guys. Well, I appreciate the time today. Let's keep in touch so we can report back next Wednesday what we're seeing.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.